Welcome back to Long Down Personal Finance. We got a sponsored video today. Somebody wanted me to cover this crazy company called PROSUS. And of course, their financial statements are based on international financial reporting standards, which I hate because I'm a U.S. accountant, bro. A U.S. accountant, bro. Anyway, we're going to cover this stock, PROSUS. What is PROSUS? It is a global consumer internet group and one of the largest technology investors and operators in the world. Basically, this company goes out and buys up a bunch of other cool, exciting tech companies. Funny enough, this company has like a 25% stake in Tencent Tencent. And I think when I did the math, the market capitalization of their ownership of Tencent is roughly the market cap of this company on the exchange. I could be wrong on that, but this company owns 25% of Tencent. You know that Chinese stock, bro, going to zero, bro, large cap tech, bro. This Chinese stock has a market cap of $344 billion, and PROSUS owns 25% of that. That's pretty freaking wild, okay? Now, this is a very complicated company. So we'll go look at their portfolio, we'll go look through their financial statements. But basically, this company is owned by a company called Naspers, which is this large South African conglomerate investor company. So Naspers owns 44% of PROSUS, and then they did some kind of weird stunk thing where PROSUS bought a stake in Naspers, so they have some kind of weird structure that I don't understand and that you probably have to dig in the details. But basically, they own each other, bro. But Naspers is, the parent company of PROSUS. So Naspers has a stake in PROSUS, and then PROSUS owns about 25% of Tencent. So a big part of PROSUS's prior returns came because Tencent was doing great. And then recently, Chinese stock, bro, have not been doing that well. And I have a feeling that's been weighing down on PROSUS. Now, PROSUS has actually been shedding their stake in Tencent. They're slowly divesting of their stake. But they still own a very significant amount of this huge freaking Chinese company. So keep that in mind. So let's go see what PROSUS is all about, okay? So they change people's lives. They're so amazing. Let's go look at their portfolio. Let's see if we can recognize some stuff here. Air Meat Spin, all right. Aruna Auto Trader. I feel like I've seen this before. It's the number one destination to buy and sell vehicles online. Okay, probably not. I've never been to South Africa, and I probably never will. Okay, so basically this company just buys up a bunch of other companies. Delivery Hero, maybe I've seen that before. Look it up. Okay, this company, it's almost like an ETF in a sense. It really is. It's almost like a private equity ETF. They just buy up a bunch of different companies. And of course, we have Tencent. We are incredibly proud of our long and continued relationship with Tencent. Pony and his team have grown Tencent into China's largest and most popular internet service, now ranking as one of the largest internet companies in the world. And they own 25%. That's freaking crazy. Udemy, I think I've seen this. Udemy is a global marketplace for learning and teaching online. Yeah, I've heard of that. Stack Overflow, I think I've heard of this too. Has built a giant, highly engaged developer and technologist community since 2008. It now serves around 100 million people across the world every month. It's one of the 200 most popular websites in the world. Yeah, that's pretty impressive, some of the companies that they own. Some of these I've never heard of. What is this, PayU? Leading financial services provider, global growth markets. Okay, so do you kind of get the picture? PROSUS owns a bunch of different companies, and they're owned by Naspers, but they also own Naspers too. So they got food delivery, they got payments and fintech, they got ed tech, and they got PROSUS Ventures. What is this? What are they venturing in? Partnering with innovative entrepreneurs to build leading technology companies and high-growth ventures. Okay, well, we already saw their portfolio. Now, let's go look at their financial statements, okay? Now, the first thing I noticed is that this is in stupid IFRS. I'm an accountant. I don't do European accounting. It's a pain in the butt. Or international accounting. International accounting is called IFRS. I already took enough time to learn basic freaking U.S. accounting. I'm not going to learn this garbage either, okay? But I'm going to try to get my way through this income statement. So this is PROSUS's revenue as of 6 months ended September 30th, 2023. So we can see year over year for 6 months, their revenue has increased. Their margins for cost of providing services and sale of goods, which, by the way, Good luck understanding this business. Okay, you have to understand each one of these companies. Good luck. Okay. Selling general and admin expenses have very significantly increased. Other gains and losses, so they recorded some kind of loss there. Look at that, a big loss. Maybe they had to write down one of their subsidiaries for a total operating loss of 415. Okay. Interest income, interest expense, blah, 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 blah. Dividend income. What happened to their dividends, bro? Share of equity accounted results. Now, in U.S. accounting, when a company you own makes a profit, if you have significant influence, you own between 20% or less than a controlling stake in the company, you actually record that company's underlying profits and your profits. And you'll see that for like Berkshire Hathaway. I think Alibaba has that as well, where they own a bunch of, or they have a significant influence in subsidiaries, but they don't control them. If they control the company, it's consolidated. But if they have a 30% ownership, the company that they own 30% of, they will record basically 30% of that company's profits on their income statement. That's basically how it works in U.S. Whatever this international crap is, this is what I think is going on here. We'll see. Okay? Impairment of equity accounted investments. So they wrote down some investments because the value of the investments was less than what they probably expect the future cash flows of those investments to be. Dilution losses on equity accounted investments. Okay? So they have some gain, they have some income from their equity investments, they have some losses, they did some write-downs. Gains on partial disposal of equity accounted investment. I wonder if this is 10 cent my end cent. Okay, note 12, we'll see. But overall, they posted a profit. But it seems like it's mostly from selling off probably 10 cent. I bet you that's what it is. So they're so profitable. They're really not. Okay, basically they bought 10 cent and it really paid off for them. And that's kind of carrying them. So basically the fortunes of 10 cent probably determine this company. And honestly, like, if they're selling off 10 cent and 10 cent comes back at some point, maybe that's a mistake. I don't know. Okay, so let's see if we can read some of the notes. Let's look at their balance sheet. Oh, this hurts my head. This is so backwards. So obviously the vast majority of their assets are investments in associates. Okay, they have some property, plant, equipment. It's not much. That's buildings and stuff. Goodwill from acquisitions, but it's gone down. Looks like they did some kind of write down or impairment. Like I said, most of their assets, long-term assets, are in investments. Investments in joint ventures, other investments in loans. Okay, so we obviously see this is the vast majority of their balance sheet. And what the heck? Okay, so they put the total of the current assets on top, and then they add them up. So this total up here is the total long-term assets. The current assets, it's mostly investments as well. They have like 13 billion, it looks like, in short-term investments, about 2.6 billion in cash, 3.7 in other investments. So, I mean, they got some decent liquidity. You know, I mean, they got at least 2.6 billion of cash. But the vast majority of their assets are in the investments. Let's see. Okay, and then they have equity first? I don't understand this. It hurts my freaking head. Okay, let's look at their debts. So non-current liabilities. So they have long-term debts, interest-bearing, of 15 billion. So their long-term debts, compared to their long-term assets, really aren't that bad. I mean, they basically borrowed some money to buy some investments, which makes sense. That's how you buy them. And then current liabilities, 3.4 billion compared to 22. So their balance sheet's pretty rock solid. Okay, what you got to watch out for is, you know, if 10 cent really goes to crap, then that might really hurt this company. But they're selling off shares pretty consistently. Okay, then we see their financial report. It's not even like it's printed improperly. I don't know if it's me or what, but I can't even see like what they're doing here. But their balance sheet seems okay. Their profit and loss seems mostly to be coming from disposing 10 cent. We'll confirm that in a little bit. But, you know, they're mostly unprofitable, except for their one amazing investment in 10 cent. Okay? Cash from operations. So cash flow from operations. They get most of their operating cash flow from interest income and dividends from equity-related investments. And obviously they pay a little bit of interest and taxes. But overall, they have positive operating cash flow from dividends and interest. Investing activities. Let's see, what do they do? So a big thing is they dispose of a subsidiary, business, associates, and joint ventures. They generated about 4.1 billion in cash from that, but they plowed 13 billion into short-term investments. I don't know if that's bonds or stocks or what. Maturity of okay, it's probably like short-term debt or something like that. Probably just holding on to cash. Repurchase of owned shares. So they bought back about 4 billion of shares over the last 6 months. And you can almost see, like, they're basically like selling off 10 cent my incent, is what I think it is at least. And then they're using that money to buy back shares. Let's see, additional investments. Yeah, they're not really making like huge long-term investments. You know, like it looks like they're just putting most of their cash into short-term investments. Maybe they're just looking around to buy something. But basically they're just hanging out, collecting dividends and interest, selling one of their larger holdings, probably 10 cent, and then buying back shares. That's basically what they're doing right now. I don't see like massive acquisitions on here. I mean, they've done some tiny investments, but it's not a huge amount. So I don't know if they're just hanging out. I guess they're just hanging out, collecting money, and buying back shares. Okay. Let's see. PROSUS is a public company with limited incorporated under Dutch law, with a head office in the Symphony offices of the Netherlands. Okay. PROSUS is a subsidiary of Naspers, a company incorporated in South Africa. It is listed on the Euronext Amsterdam Stock Exchange. Very interesting. This company is so easy to understand with 20,000 freaking investments. Okay, and of course 10 cent my incent. 10 cent's probably carrying these clowns. So, like I said, this is using international financial reporting standards. This is not what we do in America. I mean, like, there's a lot of similarities, but it takes me a little bit longer to like figure out what they're saying on there. Okay, let's see if we can. Okay, the auditor, whatever. Let's see. Share repurchase program. The group announced the beginning of an open-ended repurchase program of the PROSUS ordinary shares and Naspers ordinary shares. The group continued the share purchase program for 6 months ended 30 September. Let's see. The Naspers repurchase program of its ordinary continues to be funded by the disposal of some of PROSUS ordinary shares. Let's see. They repurchased 2% of their shares in the 6 months ended 30 September 2023, which was funded by the sale of 10 cent. Okay, they're selling 10 cent to buy back shares, which is their largest investment and probably their most successful investment. Chinese stocks are trash, bro. Just buy U.S. stocks. They'll probably buy large cap. They should take their money and buy large cap tech. Okay. Oh, here we go. Segments. Okay. Where do they get most of their money from? Well, most of the company's revenue comes from, looks like, social and internet platforms. So the huge portion of their revenue comes from 10 cent. This company is just like living off 10 cent, basically. That's what it looks like. I mean, obviously they have like other revenues. They have food delivery, payments in fintech, edtech, e-tail, etc., etc. But, I mean, most of this revenue, which could just be accruals for the underlying earnings of the companies, is coming from 10 cent. Like, that's it. And they're selling it off. Okay. Let's see. Let's see. Total economic interest from continuing effort, total consolidated. Wow. Let's see. Adjusted EBITDA. So, of course, so the 10 cent is all the, basically like a huge portion of the revenue. 10 cent is like the only investment they have that's profitable on adjusted EBITDA, which is clown earnings. Let's see. Trading profit and loss. This is probably like stunk fluctuations. Okay, this is just like 10 cent. That's all this company is. It's like a 10 cent play. I think didn't Fabio buy this or something? 10 cent, bro. Okay, so it looks like, you know, you want to play 10 cent or some crap. Okay, you can buy PROSUS, but besides their 10 cent investment, they don't seem to be doing that well, to be perfectly honest. They're just selling their largest investment to buy back shares. But, I mean, you're going to, if they sell all their 10 cent investment, you're just going to own a company that has a bunch of weird investment subsidiaries that are mostly unprofitable, even from an adjusted EBITDA standpoint, which is like clown earnings. Okay? Let's see. What do they do? For the 6 month, the impairment took its consideration. Impairment indicator assessments were performed. Okay, so it says they looked at potentially impairing Delivery Hero and Skillsoft. I don't know if they did. Okay, for potential. Okay, so they didn't write down Delivery Hero. They reported a loss on Skillsoft. Okay, so it looks like they did a write down on Skillsoft recently. Oh, they impaired it. Wasn't gonna do as well as they thought they did. Disposal groups. Yeah, I don't know. This is basically 10 cent. All right, have a wonderful day, guys. Cheers.